The proposed surcharge tax of 25% to be imposed on the EPF and ETF has been the subject of much controversy since the announcement was made. According to the bill, the surcharge tax will be levied from any individual, partnership or company whose taxable income calculated in accordance with the provisions of the Inland Revenue Act No. 24 of 2017 exceeds 2 billion rupees for the year of assessment commencing on the 1st of April 2020 at the rate of 25%. This is a tax that will be levied only once. According to the definition of the Inland Revenue Act, a company is included in the definition of a provident fund, a pension fund, and a pension gratuity fund, or a similar fund.
What are the issues that will arise after the passage of this bill?
The government announced the surcharge tax during the previous budget. The government expects an income of 100 billion rupees through this tax. According to the draft of the bill prepared by the government, a majority of this 100 billion rupees will come from the Employees' Provident Fund. The proposals to impose a 25% tax on the profit of the Employees' Provident Fund comes against a backdrop where the fund is already taxed at a rate of 14% under the Inland Revenue Act.
Even in the past, there was a tax levied on the income of the Employees' Provident Fund. Even today, they tax this income at a rate of about 14%. Generally, a surcharge tax is imposed upon the tax, but this surcharge has been imposed on the profit. So the surcharge tax for this 250 billion rupees is 62.5 billion rupees. We are asking that you stop this attempt of the government to use the money of working people in this country that they have saved for their futures, especially when they retire, for political programs of the government. This is unfair.
We should levy taxes like a bee drinking nectar from a flower. The Employees' Provident Fund and the Employees' Trust Fund are social security funds. That is the most important thing that must be understood. If some money of the fund has been invested, that money will be taxed at a rate of 25%. This will affect the people's welfare directly. Therefore, I believe that when decisions are made regarding these matters, they must be more cautious.
The interest rate due to a single employee by the year 2021 will be reduced by about 30,000 rupees. If a single employee is losing 30,000 rupees, that means the government is looting a total of 60,000 million rupees from the Employees' Provident Fund.
All these businesses and the Employment Provident Fund have earned this income during 2020 to 2021 income tax year, and they have already spent that money. Some of the profits have been invested in assets, some have been used for the payment of dividends. In the case of the Employees' Provident Fund, the profit they have earned had been already distributed among the members. So as a result, if they are required to pay this surcharge in 2022 in two installments, one at the end of March this year and the other at the end of June this year, they will have to dispose of the assets that they have in the market, probably at a loss, to generate the necessary cash for making this payment. Now, for example, the problem for Employees' Provident Fund would be much serious. That is because the Employees' Provident Fund doesn't have cash on its hand, except the money they need for a day-to-day basis for making refunds to the members, and all other monies have been invested in government treasury and treasury bonds.
What are the companies and partnerships that will be subject to this tax? What are they going to do with the money that the government gets out of this super gains tax, even after taxing the Employees' Provident Fund? They are going to give it to their party supporters and political allies. They will give them contracts. This is a bigger scam than the central bank bond scam. They are looting the Employees' Provident Fund and distributing the money among their party supporters. These are the benefits that the employees of this country gets for a certain sum of money that is deducted from their salary, and the government is going to acquire about 70 billion of it. This massive tax is going to be levied from the biggest companies in the country. What will happen to this country afterwards? If businessmen are discouraged, the number of jobs that will be lost is unimaginable. We will have to see if this tax is being imposed to the detriment of certain entities and to the benefit of others.
They are preparing to loot the people who earn their own money through this surcharge tax. What is this theft that they are preparing for in broad daylight? This is a classic example as to how a government is run according to the whims and fancies of the business class.